Bring him in because money moves first and nobody knows more about it than our man Stephen Flanagan. Mr. Flanagan, how you doing today?
Doing good, guys. Good to see you back, Steve. I hope you enjoyed your New York trip.
I always do. I'm in New York quite a bit, as you know. It was interesting. A lot of talk in on the floor of the exchange about the dollar yen and how that move happened. And you were right about the dollar pushing higher there. But it seems like Trump's pick for Bassett has put a little damper on the dollar. What do you think?
Definitely, Steve. I think because his focus is going to be, as most of these cabinets, on China,
Yeah.
and that puts Japan off to the sideline. And the yen is a great buy up here. And I think
Mhm.
that you had mentioned that that's what you wanted to do, because you've got the threat of Bank of Japan above your head.
Yeah.
So if we look at the Secretary Treasurer select, what other currency has suddenly started to rally? The Mexican peso,
Yeah.
because if the focus is on China, then everybody else says, "Woo, maybe I could take a deep breath here."
Yeah.
And my line for today is, what goes up must come down. You can't have these type of moves. We're so overextended. Look at, as you've been talking Bitcoin. I mean, if that goes to 80,000, wow. So what's the big deal?
Right.
I mean, you can't have something that moves as fast as it moved not have a significant retracement, and that's healthy for the upside move that everybody wants.
Well,
Steve,
what if you say that there's just not enough liquidity out there for the Bitcoin? There's not enough on the exchanges for people to buy.
he's talking to
So
you, Mr. Flanagan, not me. Uh-oh, we just lost Stephen. There he is.
can you hear me, Steve?
He
I,
threw.
I, I think I have a pretty bad connection here. I'm going to call right back in if that's okay, guys.
Okay, we'll see Stephen
Yeah, I
come
totally
right
agree
back.
with that. And look, he's right, Howard. But what I say to you is, what if I tell you there's not enough liquidity actually on the exchanges, and everything that's getting dumped onto the exchanges is getting eaten up pretty much, right?
It is. Again, I just think that it's pretty quick moves though. We've seen some pretty big moves of inflows come into Bitcoin, into the exchanges. It hasn't really moved down as much as you would think that it would. Um, based on the facts. Hold on one second. I got
Can you hear us now, Steve?
He's muted on my side. Hold it one second here. I got
I
to
can
enter
I
him
can hear
back
you. So
into
let me
this.
ask you, Steve. I think your video's off, but the
That's
question again back was, what do you say to the people who, like myself, who say there's just not enough liquidity on the exchanges to buy the Bitcoin that you got to pay up for it? Mm,
Limited.
right.
So these moves up are being accentuated by not only low liquidity, but this is a very immature marketplace where a lot of shenanigans go on,
but
um, in front running, and things to that
I
degree.
would say that's cleaned up a lot in the last 2 years.
Yes, it has.
Yeah,
Yes.
especially with ETFs and now some Fed regulations coming in here. I think it's not as bad as it used to be. You can't just 100x stuff and 300x stuff
That,
anymore like
that,
you used to.
I totally agree with you. And now, you're beginning to see reverberations of talks about a central bank coming into the crypto space. And you know, any of the regulatory environments that begin to establish a framework of operations will be a very positive thing in that market space.
Agreed. Yeah.
absolutely. Mr. Flanagan, what do we think about our new Secretary Treasury and how that will affect rates as we've talked about? It seems like rates took a little bit of a breather here as he got his, nomination, whatever you want to call it.
I'm going to take a little bit at odds. I do think interest rates are going to continue to come down, probably now a 0.25% at a time, but it's not so much a U.S. centric thing.
Right.
It is more that the rest of the world, we have Canada GDP coming out this week. I mean, that's probably going to be on the low side. We already know the Europe and the UK were very low. So I think that, it's more a factor that the rest of the world is slowing quickly, and the US has to stay in lockstep. Otherwise, we're going to split at the seams in the financial markets with the dollar just roaring on the upside.
Right.
The dollar index hit, what we had talked about as a stretch high, 108.1020.
Yep.
We got to 108.07. It's time for a pause. I think the US is going to have to stay in step here. But what I did want to highlight to you guys was the earth shattering news last week was Christine Lagarde's comments.
Right.
This week, over the weekend, you had the leading candidate in the German February snap elections, Merz, begin to talk about the adjusting the debt brake in Germany, allowing Germany to suddenly create a budget deficit. That's huge.
Yeah.
It is. When you look at it from that perspective, one of the things I heard over the week was inflation, and that Trump does not want to lower rates anymore. And regardless of what Bissett wants to do, Trump will still be the president. He'll still be the one that kind of tells Bissett what he wants, right?
Yeah, that seems to be the way the entire cabinet is setting up. You know, and if you look at a lot of the corporate businesses, that's the way they're all set up. You have someone at the top that simply barks out the guidelines or commands, which everybody then executes, and that does pose an efficient mechanism. But I don't think that the U.S. rates are coming drastically down. You're at 4.75 now. It's possible over the next 6 months, maybe to see a 4% handle. As I talked to Howard last week, plus or minus 4% is probably the base that you'll see. But it's probably the ECB that has to get down into a 2.5% rate. And the Bank of England's going to be following probably an aggressive stance too.
But what if I say I don't think the rates come down? I think the rates stay where they are because honestly, inflation is still rearing its ugly head.
This is another one of these bumps. The hard part of inflation now is ahead of us. How do you get to 2%? Okay, will they accept 2.5, 2.8 as an okay guideline? I think they're going to have to.
Right.
Oil coming back off here on this potential peace accord. These are very positive effects to inflation, as oil is such a huge component of it. But Steve, I mean, it's possible 4.25, but I think that the U.S. is going to have to, in a coordinated manner, which they've been in ever since 1984 when they did the Plaza Accord, and they've moved more and more to this. They're going to have to stay coordinated with the rest of the central banks in the world.
Okay. All right. Bitcoin 95,000 here. You still think we're going 94.8 there, Howard?
Oh yeah. Yep. I do. I think we're going to see continued sell-off. We're just seeing it across the board here on the crypto side. We're going to see a little bit of a sell-off, a little bit of a breather. People are buying equities, taking some money out to buy their turkeys. Like you said, inflation's in front of everybody. We've seen the estimates that people are going to spend $650 on Black Friday based on CNBC's results. So we'll see. You mentioned Euro. Doesn't look like anything moving in the right direction over there over the weekend either. Still there, Stephen. We still see their stocks continuing to get hit here today. Stocks was down when I looked at it before we opened here.
Yeah, I mean 105.20 roughly right now. Resistance is 106.1020. I look at these type of corrections as very healthy for the marketplace. We've talked about this for the last couple of weeks about, how we felt very uneasy with these one-sided type moves that just, we're higher again today. We're higher again today. This is healthy. I think we're going to see a correction here. The one I'm watching is Sterling, roughly around 126 here. I'm hoping we see a bounce up to 127, 10, 20 level, where I would like to look to reestablish my shorts.
Okay, that makes sense. I can see that right here about the spot from Wednesday the 20th or so.
Yeah, that's right. And, the euro, if you've got the deep pockets, euro's a sell on just about any rally here because, I think that the magnet of parity is overwhelming right now based on simply the economics of the day.
Right. And for those that don't understand what Steve has been talking about here, it has been, that the euro at $1.49 right now is headed back to parity with the U.S. dollar at a dollar. And his key point there was 103.358. Is any break below that, look for it to, money moves first, it moves quickest, and watch for that downward knife to break. Anything
And
else on the you looking at any of the U.S. economic data today this week? We got a little bit, before the end of the month.
no, that's it, Howard. I think that that's a good wrap. Look ahead. It's a short week. Wednesday's the big day with core PCE. Outside of that, I think it's going to be a very quick week, and it'll be over before we know it.
Yeah.